So why am I making a video about how to have bad credit? The truth is I want you to have good credit, but psychology says that you don't want me to tell you that. Negativity bias says that our brains are more likely to save and remember things that are negative instead of positive. That's why you might not remember everybody's names from your third grade class, but you might remember that fight you got into, or you might remember that person that always had bad breath. So right now I'm going to tell you all of the things that you can do to lower your credit score and keep it low, because for one, most people are doing things that they think are positive but hurt their credit, and they don't even know it's going to hurt their credit. Secondly, because people are going to remember things that are negative. And third, because we can solve our problems inversely by turning our problems into solutions, which looks like doing the opposite of the negative thing that will cause the problem. So let's go ahead and get into the list. So the first thing is going to be paying off your car loan, or any loan for that matter. Most people get real excited about going and paying off their car loan once they're finally done with the payment, and then they own the car. But the problem is, anytime you pay off a loan, what happens is your credit score will drop. Now the drop happens for a similar reason to closing a credit card, which most people have heard that anytime an open account closes on your credit report, it actually does damage to your credit score. But most people don't know this, and of course you're going to go ahead and pay off your car loan by the time you get down to that last payment. So what do you do about this? This one is a little bit harder to solve because, again, everybody's going to pay off their car loan. So the best thing to do is gauge when you're paying off your car loan in regards to if you're trying to get a house and you're going through that process, if you know you're about to pay off the car loan in that process, or if your lender tells you that you need to pay off the car loan so that you can lower your DTI, which is your debt to income ratio, and then be able to afford more home. Then just keep in mind this fact that while that will drop your score, it will be a temporary drop, and over a few months, maybe about 6 months, I'll give you as a measuring stick to see when you might start to see some recovery from that drop. Of course, it's going to be a different time frame for everybody, and if your score was really close to that threshold of what you needed to get approved for the home, then you might want to wait if you have the time to wait in regards to paying your car loan off, because of course you don't want to not pay it and then get a late payment, because that will hurt you even worse. So again, with the car payment issue, it's just going to be about timing. If you have a few payments where you can, not pay it off around that time, and if you do have to pay it off around that time, making sure that you are being mindful of, okay, I'm gonna pay off this car loan, and then I'm gonna wait a few months for my score to recover, and then I'll go and apply for the thing that I need to make sure I meet the threshold as far as score goes. Now, the next item we're going to talk about is maxing out credit cards. A lot of people are new to credit cards and they mismanage credit cards, and a lot of people avoid credit cards because they hear negative things about how they affect the person. But credit cards are one of the best things that you can have. However, most people, not knowing how much maxing out the card can affect their credit score, end up thinking, oh, I just got this $300, $500 card, or maybe even a $3,000 card. I need to use it to build payment history. Let me just go swipe it for the full amount, and then I'm gonna start making the payments. But they aren't aware that the balance on that credit card affects them severely, almost as much as the payment history, because payment history is 35% of your score. Your debt and amounts owed, which will be the balance on your credit card, is 30%. So I've seen a person with a $300 credit card go swipe it for the max amount, not knowing that they need to be mindful of how much they're swiping for, as well as paying on time, and that person lost 90 points. Now, the good thing about a credit card is, while it can have a dramatic effect on your credit score in regards to the balance and how it affects your credit score, when you pay it back down, you can get those points back that you lost. But ultimately, you want to avoid being in that situation altogether. So what do? Well, the easy answer is to make sure that you are paying your credit card balance down before the statement date. The statement date is the actual date that they use at the company to determine what is put on your credit report. So whatever your balance is, when that date passes, where they generate the statement, which is usually around the time your payment is due, of course, call the company to ask when your actual statement date is. And as long as you pay before that statement is generated, then it will have a low balance or a zero balance, and that's what they'll report to the credit bureaus. Now, after that date passes, if you use your card again, then of course you can use it and the balance can sit there until it's almost time for that statement date, but you just want to make sure that you're paying it off or paying it down right before the statement date so that it's never hurting your credit score if you have a high balance. And to go even further than that, making sure that you're never using more than 30% of your credit limit is going to be another thing you can do to keep yourself out of debt, and to also make sure that you aren't having anything reported at a high utilization rate, which can lower your credit score. And again, ideally you want to be under 10%, but as long as you stay under 30%, you'll be in a good place. Now, another thing that people do to mess up their credit is applying at data brokers. I'm curious to know how many of you have heard that term before, so if you have or have not, leave that down in the comments. Now, the reason why a person might be applying at data brokers is because they are trying to get credit, and usually when you're in a state of bad credit, you are going to try to apply at any place you can possibly apply to get some credit or to get a loan if you need some funds, whatever the reason might be. Now, this is usually after you get denied at your bank or your credit union for a secure credit card or a regular credit card, and you think you don't have any other options. Now, data brokers are those websites that you go to, you enter your information, and then they shop your information around to see who is actually going to approve you or who might approve you for a loan or some type of credit. Now, in general, applying for a whole bunch of credit at different banks, credit unions, different websites is of course going to be a negative thing because it can give you a lot of inquiries on your credit report, which can lower your score and make you look more risky because of course you're applying at a whole bunch of different places. The reason it makes you look risky is because you're applying at all these different places, more than likely because the first person told you no, and then if you have multiple inquiries, that means multiple people have been telling you no. So of course, that's why that is a negative impact on your credit score. Now, the additional problem of going to data brokers to try to get funds, to build credit, or just because you need the funds and you have a low credit score, is the fact that they sell your information to other companies, and most of the time you aren't even aware that you're giving away your information. Now, what you might see happen is after you fill in your information at that place, you all of a sudden start getting a whole bunch of random calls, random text messages, or even random emails with companies that you didn't try to apply for or sign up for, and you're like, how did these people get my information? So that opens up the door to more than just damage to your credit score from inquiries. It can also open you up to identity theft issues with people stealing your information, going to apply for credit cards or phone bills and other things in your name. You could leave yourself open to phishing scams and other scams where people are trying to reach out to you and get additional information from you. And all of this can cause even more damage to your credit score. Now, I remember the first time I had to deal with an issue with identity theft. Basically, I had looked at my credit report for the first time when I was 18. I knew I didn't have any ability before then to go and apply for credit. So I was surprised to see that I had a loan opened up in my name and one other thing opened up in my name on my credit report, lowering my score before I even had a chance to do anything with my credit score. I can tell you it made me feel very unsafe. It made me feel taken advantage of, and I didn't have a good feeling overall after knowing that it was so easy for somebody to do something like this. Now, these data brokers, they make a fortune selling your information to robocallers and spammers and other people that want to get personal information from you, sometimes even information about where you live. And that's why I'm glad to talk to you about today's video sponsor, Aura. I've personally seen how Aura can identify those data brokers that are exposing your information and submit opt-out requests on your behalf. Brokers are legally required to remove your information if you ask them to, but they make it super hard to do, and this is something you can let Aura do for you. Within minutes of logging into the app myself, I saw them submit the opt-out request for me and get the process started very quickly. Now, you can try Aura free for 2 weeks by using my link. Now, right now we're talking about data brokers, but there are so many other threats out there online that you can't see, and Aura has a lot of other features to protect you and your family. Now, Aura can protect you on your desktop, laptop, and phone, and it'll keep you from having to download and get a bunch of different softwares and apps like parental controls, antivirus, VPNs, password management, identity theft insurance, and a bunch of other things. And you get all of that at an affordable price, especially when compared to getting all of those different options separately. And like I told you, with me personally having my information taken and used without my consent and hurting my credit credit definitely made me understand that I need to protect my children, and they have those parental controls that can help make sure of what's going on with your children, their activity online, and protecting them. So let Aura do the hard work of protecting you and your family online so you can have peace of mind and worry about other important things. And it's as simple as this. You can keep letting people take advantage of your information and profit off exploiting you, or you can go to aura.com/thecreditelect and start your free trial. The link will be in the description. Now, the next item on our list is paying collections and charge-offs. So when people are trying to work on their credit, usually the first thing that they do is go to collections and charge-offs. They go to their credit report, find their collections and charge-offs, and then they try to pay them off. Now, most people do this because this is what everybody has been told to do, and there really isn't anything simpler that a person would think of to do, because the next best thing to do is to dispute, which requires you knowing some of the consumer protection laws that are out there, knowing what to put in the letter, knowing exactly what you're doing when you're trying to dispute something. And most people just want to avoid that, or they don't know that they can do that, and they go straight to paying something off. And they go straight to paying off their collections and charge-offs. Well, the problem with that is it causes a negative effect to your credit score, because the action of paying them, while it may seem like a good thing, causes your credit score to drop. Now, the reason for that is because every account on your credit report has certain dates that are attached to it in regards to recent activity on that account. And the older these items get, the less they affect your score. And as soon as you pay them, it updates those dates, and then it can cause a negative effect, because even though you're paying an account off, the account will still be on your credit report. A lot of people think it'll be taken off, but it won't. It'll still be there on your credit report showing that you had that collection or charge off. The balance would just go to zero. And again, not only do you not get the account removed and it stays there, you also update certain dates on that negative account, which has a negative effect. So you think you did something good, and then you end up doing something to harm your credit. Now, the only way paying a collection or charge off can help you would be if they remove the item from your credit report. Now, this will not happen with charge off accounts, but it can be possible with collection accounts. But the thing is, 9 out of 10 companies will not remove it off of your credit report, even if you pay. And they also don't have to. So there's nothing that you can do to hold it against them. Now, after July 1st of last year, 2022, there was something put in place to have certain medical collections removed if they were paid, but that only applies to certain medical collections. And I'll send you to a video on that if you want to check that out. But even if you can do that, some medical collections are extremely large. Some I've seen 2,000, 3,000, 5,000 or more than that. So you have to weigh out the options of, is it worth me paying all of this money to get it removed at this point? So as a solution to the problem of paying collections and charge-offs hurting you, the best thing that you can do is actually to dispute an item, because there are a lot of errors on credit reports. As a matter of fact, 72% of credit reports have errors on them. So those errors are what you can use to help yourself in regards to your credit, and to actually seek out having an account that could be harming you removed. And based on what the law says, it doesn't matter if you've paid the account, it doesn't matter if the account is yours, you can actually get an item removed just because of errors. So that is the best thing that you can do in regards to those items on your credit report. Now, if you need some help and resources that can help you do this yourself, I have some down in the description. But if you want somebody to help you with it, you can also set a consultation and get some personal help and instruction on what to do with your credit. That is also down below. So another option, if a person thinks it's a little bit overwhelming as far as how many things they have to pay off on their credit report, they might try to go to debt settlement. And debt settlement is basically paying a company to take some money from you, put it to the side in an account, and then at a later time pay off all your debts at a discount. Now, this sounds really attractive to a whole lot of people because they don't have to do the work of negotiating, getting the debt down, and then paying it off. But there are some problems with this as well. Now, some debt settlement companies do things differently, but ultimately, usually what they tell you to do if you have open accounts on your credit report is to stop paying those accounts so that they can work on trying to get the debt negotiated. And what this does is it causes a whole bunch of late payments to be added to your credit report, which is one of the most damaging things that you can do to your credit. And then at that point, what has not been mentioned to you is how much is going to drastically lower your credit score. And the pain felt from late payments can last quite a while. And then a lot of times you have to pay them their fee first. So while money is going into the account, you're putting money in, but the first half of your money might go to the fee that they have. And then after you covered their fee, Then they'll use the rest of that to go ahead and pay off your debts, which extends out how long it takes for you to get it paid off, which this is something you could have done yourself by just saving up the money and then just going ahead, reaching out to your debtors and then telling them, hey, I have this much, and trying to negotiate the debt yourself. And ultimately, debt settlement isn't going to be good or the best first option for most people, especially if you don't have a lot of debt or if you have open accounts. But if you have only closed accounts and they're older, then debt settlement might be an option for you. So if you only have closed accounts and your debts are like extremely high, like $20,000, $50,000 and stuff like that, then you might want to go ahead and do debt settlement if you just want to be hands off with that process of paying them off and negotiating. But other than that, people usually have a better first option. If you've done debt settlement before and you've seen the negative effects that it can have on you, or even if you've had a good experience, please leave your comments down below so we can all learn from your experience. Now, I know after hearing that information, you might not like debt settlement companies, but one thing you should definitely like is this video. So go ahead and hit the thumbs up button for me if you did get value from this video so far, and then that will help YouTube to show this information to more people that needs that information. Also, subscribe to the channel if you want to continue to get more good information like this. Okay, now let's talk about bankruptcy. Now, bankruptcy is another go-to option that most people have when they don't want to go the disputing route, they don't want to go the debt settlement route, and they just think that they've gotten to a situation that is just ultimately unsalvageable. But the problem is with bankruptcies, and there are chapter 7s and chapter 13, you have to qualify to get a chapter 7 and you end up getting a payment plan when you're on a chapter 13. So depending on which one you get, they affect you a little bit differently, but they both have the same negative things in common. One of those is that they stay on your credit report for a long time. With chapter 7, it stays on your credit report for 10 years. With chapter 13, it stays on your credit report for 7 years. Another negative thing is it can stop you from opening up a bank account. It can stop you from getting an apartment, as well as stopping you from getting things that are credit related. If you do a chapter 7, you aren't able to get a house for 2 years. That is, if you get an FHA loan, which is the most common first-time home buyer loan. And with a chapter 13, you don't have to wait 2 years, but usually, depending on how much debt you owe, those plans average a 5-year payment span. So that's even longer than the 2 years you would have to wait if you're trying to get a home. Now, all the bankruptcy in chapter 7 do is pay off accounts on your credit report, and I already told you what paying off accounts does, which is actually a negative effect. Not to mention, they don't remove the accounts off your credit just because you did the bankruptcy. They will still be on your credit report. They will just show a zero balance once these two plans are done. And then after the time span of negativity that you have to deal with those bankruptcies has passed, then you can start rebuilding your credit. In some instances with the chapter 7, you can start rebuilding your credit a little bit sooner, but keep in mind those negative accounts will still be present on your credit report, so you will still have to deal with them to get to a better place with your credit. So what is the alternative to doing a bankruptcy? I always tell people that it's best to try to dispute first, because that is actually the easiest, lowest cost option that is out there. With bankruptcy, you have to pay to do the chapter 7, and you definitely have to pay to do the chapter 13. And because of the long lasting negative effects of that method, it's always going to be better to do something that won't have a long lasting effect, that could possibly get you to a better place quicker and at a lower cost to you. And I always recommend that you try to do it yourself before trying to seek help. But if you need help, the help is there. But you can get all my free resources on this channel and down in the description. So now you know some of the negative things that can happen as well as some solutions. But if you want more information on actually trying to do the disputing for your credit, then go to this next video and then you'll get some help with that as well. I'll see you in the next video.